it's Nvidia's game to lose. Like, I think full stop at this point. They're not showing any signs right now that they're losing.
To Nvidia right now with Bernstein Research's Stacy Rasgon. He's on the ground at Nvidia's conference. Stacy, great to have you with us. We were talking about Nvidia and how, this is not necessarily the audience for it. I mean, Jensen had a lot of technical things to talk about. But in terms of answering the burning question of investors, and that is the CapEx spend picture in place? Is that steady? Is it rock solid? Did you get anything from what he said today to answer that?
Well, I mean, at this point, I don't think that we're seeing any signs that it's at risk. If anything, he gave us a view of the roadmap going forward for the next several years, and the performance improvement and the total cost of ownership improvement for the future platforms as you go from Blackwell to Blackwell Ultra to Rubin Ultra. He even talked about Feynman in 2028. We're talking another, I think, more than an order of magnitude improvements in performance and total cost of ownership for the next couple of years. It is going to be a very NPV positive thing for customers to upgrade. So I don't think we heard anything that Jensen said that would suggest that CapEx budgets are getting ready to roll over. And again, who knows? We'll see when we get there. But at this point, I thought it sounded great. I thought he did a great job.
Yeah, there's still skepticism, though. I mean, that's the thing with investors. Like if you are a believer that there is a growth scare, that there is a recession on the horizon, can you be bullish, Nvidia? I don't think Nvidia outperforms.
I don't think that's an Nvidia question, right? That's an everybody question. If we're going into a recession, I mean, semis in general tend not to do well in recessions. Again, there are some secular drivers here. I think they can hope to offset some of that. Clearly, the AI spending is happening. There are business models, cost reductions, revenue models that are starting to get built on this stuff. There's this whole long-term trend that he talks about as you move from sort of more traditional computing to accelerated computing, which is a massive cost saver. So there are other drivers. Again, in a recession, you want to save costs and dial back, and these are investments I think that can pay off. But I mean, if we go into a significant global or local recession, I don't think anything in semis does all that well. At least Nvidia does have some of these structural drivers, and I've said this on the program before, but it's not even expensive. It's like in the low 20s if the current numbers are low 20s price to forward earnings if the current numbers are anywhere close to being correct. And there's a lot of other things out there that are much more expensive that I think are likely to get hit just as bad or worse from a fundamental standpoint in a recessionary environment.
Yeah, so price to earnings, you're right. But, Dan just mentioned the competition coming, and obviously we saw a deceleration. Well, I mean, you probably were listening to some of the things that Dan said. I mean, we heard from Alibaba. We heard a month and a half ago about the DeepSeek things. I mean, clearly people are going down that road. Whether or not they can catch up remains to be seen, but they will compete on price. So I guess my question is, how concerned should we be about potential margin deterioration from here?
Again, I don't think it's about price. Like, the price of the chip is only one component of the purchase decision. What really matters is total cost of ownership. So that's the price of the chip and the power and the cooling and everything else that goes into it over the lifetime of that chip's lifetime, based on what kind of performance you can get out of it over that time frame. And I think Nvidia, I mean, even today, I mean, you can see where the dollars are flowing. They have the lowest TCO. And if you look at, again, the roadmap and the improvement trajectory that they laid out today, I think it's going to be hard pressed for any of their competitors really to have a significantly better TCO, and that ignores the fact everything else that they're doing around software, around systems, hardware, ecosystems. They talked about co-packaged optics now that they're bringing into place, networking. They're the only ones out there with a full stack hardware and software solution. Nobody else has that. I'm not terribly worried about their ability to compete.
Stacy, it's interesting. You just said what competition with a big question mark, maybe two question marks after that. And, when I look at the analysts, there's 76 that cover it. 70 have an outperform or buy on it. The average price target's $172. The stock's trading at 115. It's down 25% from its all-time highs. So there's a disconnect between what investors think and what Wall Street analysts think. And then when I hear a Wall Street analyst be really skeptical about any competition, we've all been doing this a long time. That competition comes from the place that you don't expect it. So I really want to focus on the disconnect between what investors see and selling it and versus what the analyst community thinks.
Sure. So first of all, it's not just Nvidia. Like there's been a broader degrossing. It's not just Nvidia that's come down. I do think that again there was some nervousness. There was the whole DeepSeek thing, which by the way I think the only thing we've seen since DeepSeek was infrastructure spending going up, not down. And my view on DeepSeek, again, we may have talked about this, is I thought DeepSeek was actually good news, not bad news, but it is what it is. You can look at where the competition is driving. There's other merchant suppliers. You have AMD, and I guess maybe Intel's still in there. And again, I don't think AMD. I mean, I even question the need. Frankly, I mean, in terms of second source, I really do think it's going to be the hyperscalers doing their own chips. These are ASICs, and Google does TPUs and everything. I think it's the wrong time to worry about it. I think the right question to ask right now is not who's winning or losing between like GPUs and ASICs. Is the opportunity in front of us still big or is it not? Because if it's still big, then they can both thrive. If it's not, they're both screwed, right? So I think you have to believe that we're not on the saturated part of the S curve now. I don't think we are. My guess is the market. I think I said this. It's Nvidia's game to lose. Like I think full stop at this point. They're not showing any signs right now that they're losing.